I recently heard a metaphor that really resonated with me, and you know how I love my metaphors. And it was that watching the stock market is like watching a man walk up a mountain with a yo yo. You can either focus on the yo yo, which goes up and down, and you feel like it's this crazy, unpredictable kind of process, and it can feel very tumultuous. Or you can focus on the fact that the man, however slowly, is walking up a mountain. And I want you to hold that picture in your mind right now as we head into the new year on the heels of a year that for many of us was not necessarily a great one financially. It can be very easy to approach finances from kind of a reactive place. However, looking at just the last year or just the last 6 months and basing all of our future projections on that is a dangerous thing, because the fact of the matter is it goes up and down. The sort of market goes up and down, our own energy goes up and down, all of those things. And so the better approach, in my estimation, is to take more of a long view, to keep your eye on the fact that we are all making progress up a mountain, however slowly. And today's guest is Danielle Hendon. She is a fractional CFO. If you're not familiar with that phrase, it basically means that she is the chief financial officer for small business owners, just like us. And so she brings a lot of great expertise to this conversation and has a very practical sort of can-do approach to breaking down, looking at what has been and making a plan for what will be in such a way that we are intentional and that we are looking at our business from a growth-focused mindset. So I'm going to let you dive in, but if you happen to be listening to this episode when it drops, happy holidays, happy new year. I'll see you next year.
Welcome to This Can't Be That Hard. My name is Anami Tonkin, and I help photographers run profitable, sustainable businesses that they love. Each week on the podcast, I cover simple, actionable strategies and systems that photographers at every level of experience can use to earn more money in a more sustainable way. Running a photography business doesn't have to be that hard. You can do it, and I can show you how.
Danielle, welcome to This Can't Be That Hard. I am so excited to have you on the show. I am so excited to have this chat today. I think that this is, it's one of those things that, like, as far as I'm concerned, we cannot talk numbers enough, even though I know that it is the thing that many of my audience members are like, oh, I don't want to. But here we are. It's, we're coming into a new year, and I feel like this is the time. Like, it's time to sit down, sit at our desks, do some, roll up our sleeves and do our big girl work. So I'm really excited to have you on the show. Before we dive into the, kind of the meat of what we're going to talk about, give everybody the brief intro of who you are, what you do, where you're located, all those kinds of fun things.
Yeah, so I love talking to creatives. I went to college to be an opera singer. So the arts and the creativity are close to my heart. I had an English professor that made us write about the future of our career path. And I realized very quickly I was not going to be able to afford myself. So I had some friends that were taking some accounting classes, decided to give that a shot, and I loved it. You wouldn't think it, but there's a lot that goes with music that is mathematically inclined and leveraged itself very well to accounting. So went through, got my master's, got my CPA, and went to a public accounting firm, which I loved working at. I did the audit side of things, and then I started a family and realized 80-hour work weeks and a newborn don't mesh very well together.
Right, of course.
So jumped ship from there, and being in the Houston area, a lot of my experience was in oil and gas, even from the public accounting space. Mm-hmm. So I landed at an oil and gas company in downtown Houston. Loved where I was again. I've lucked out in the career path and had really great jobs, but they went through bankruptcy and they came out the other side owned by bankers that just started slicing and dicing.
Sure.
2 years later, we're still going through bankruptcy and the pandemic hits. So it became very clear that they were going to close the doors. And it was honestly a bit of a double-edged sword for what I will admit was a workaholic mom. When you love what you do, you throw yourself into it. Mm-hmm. And now we were all at home, and I was help them get through school, mom, and how do we get to swim practice and all of the things. And I got to know the friends and the teachers and the coaches, and I didn't want to give that up. So when I was finally let go from that company, I decided to take a leap of faith and start out on my own and figure out how can I build a business that gives me the flexibility I want for my family, but allows me to do what I love doing. I was lucky enough, again, all the luck, lucky enough to have a friend who introduced me to another fractional CFO. And she kind of gave me this is what I do, this is how I do it, and you've got this. And I was like, okay, we're going to do it. And I like to tell people, instead of increasing shareholder value, which is what you do in corporations, I now get to help small business owners increase their livelihoods and their legacies. And that feels really good.
That's amazing. So for anybody listening who is not familiar with the term fractional CFO, do you want to give us the sort of broad brush definition?
Yes, there are a lot of different fractional CFOs.
Yes.
Technically, what it means is your chief finance officer. In a corporation, they're the ones handling everything to do with finance, often including the accounting work that comes underneath it. Mm-hmm. From a fractional perspective, you will find usually 3 different types of CFOs out there for small businesses. You have what I would call the operational CFOs. So they're very much like a controller. They help with the bookkeeping, the accounting, the getting through all of that. You have what I'm going to call the funding CFOs. If you need to go get capital, they're going to help you figure out how to find venture capitalists, talk to the banks, all the things to get funding. And then you have the forward-looking, future-focused CFOs, which is where I fall. When you're looking at budgets and forecasts and cash flow and how do we look forward in the business and make sure we're not just looking at the past.
Nice. As photographers, we call ourselves small business owners, which we are, but most of us, let's be frank, are single member business owners where we are wearing all of the hats. And one of the things that I am always, I say before you outsource just about anything else, taking care of your books, like getting an accountant, a bookkeeper, that sort of stuff in place, unless you happen to have a background in, you were trained as a CPA or perhaps your partner as a CPA. I feel like that's the sort of thing that like none of us should really be trying to figure out as we go. So this past year, let's just talk about 2023 was a tough year for a lot of small business owners in general, and certainly photographers fell into that. Photography, no matter what you charge, is a luxury item. Like nobody needs a family photographer some people would argue you need a wedding photographer, but wedding budgets were being cut, all kinds of different things. And photographers felt that. And in turn, it's like when you are running a business with such small kinds of margins, you then feel like, well, I have to lock down my spending. I have to lock down everything. But a lot of it is reactive. It's not proactive. And so, I'm a big believer in we are always moving forward. We are learning from the things that we have gone through. So as we are sort of looking forward, I want to draw on your expertise, and that's the reason that I've got you here, is that I want you to share some of the insights from the finance side of how, small business owners who are riding the waves of even in a good year, we've got fluctuating income, but then also trying to forecast and budget and make plans so that our money isn't quite as reactive so that we can grow the business in the long term.
What makes or breaks a business is the cash in your bank account. At the end of the day, I could tell you to budget all day long, but if you don't have cash, you can't stay in business. You can't pay the bills.
Right.
So a lot of people come to me and they want a cash flow forecast. They want to know what do we do with our cash? But in order to get to a good cash flow forecast, you got to have a budget. Mm-hmm. And in order to get a budget, you got to know your revenue and expenses. And before we even look at revenue and expenses, you have to have the books clean and know that your balance sheet reconciles. A lot of business owners will talk about revenue and sales, and they know how much they've made. But very few business owners look at the balance sheet. They'll look at the bank account, but they don't look at the balance sheet.
Right.
So I work with all of my clients in a 6-part framework that covers each of those things we just talked about. And we start with the balance sheet. We want to make sure that your bank accounts are reconciled First of all, we want to make sure your books are being done. So I'm going to second you on the, if you are not getting your books done, please don't try to figure it out yourself. Bookkeepers are incredibly inexpensive compared to your time and effort.
Right.
Get the books done. They will do what they call a balance sheet reconciliation. And in that balance sheet process, they're going to make sure that everything got recorded. So I sit down with my clients. When we look at that balance sheet, we make sure everything got recorded. We also have the really tough conversations about debt. Mm-hmm. And we say, did you get an idle loan? Do you have a line of credit? Do we have credit card debt that we're not paying off? Mm-hmm. And so much of money is mindset. We also talk about, how do you feel about debt? Is it a pressure and anxiety that's weighing on you? Or are you the kind of person that's like, oh no, I'm going to take that on because I'm going to put it over here and I know I'm going to make money. Mm-hmm. There is such a thing as good debt. It's not always bad. And the line that I draw when it comes to that is intentionality. If you are intentional with the money that you took when you took that debt, then you probably have a plan to make it back. If it's unintentional and it's the, oh my gosh, I got to pay the bill, we got to swipe the credit card, that's going to be what we call bad debt. But I don't want you to feel like it makes you bad. The debt is bad for your business. Right. But we have all been there. We've all had to you got to start somewhere. So we've all been there. I want to normalize that for everybody, but it's also making sure, let's understand what that picture looks like.
Sure. Yeah. And I want to just pause there, because one of the things I have always been extremely reluctant to kind of speak about, and something that I'm trying to get a little bit better about, because I think that maybe I've done a disservice to my audience, is this sort of fine line. I've always sort of taken the approach of like, well, your money is your business and I don't want to like weigh in on it. And I still feel that it is your business. But I do think that a lot of photographers kind of shoot themselves in the foot with this idea that because we start our businesses in a very bootstrapped kind of a manner, right? We have almost no startup cost. You already own your camera. You put a website together and you can be in business. Like it can be a matter of a few $100s and you've got your like tax paperwork filed. That is great in some ways, but in other ways, what happens is you get into business and are like, well, it doesn't cost anything to be in business. And so you find out the hard way kind of every step of the way. And I think that, not that I necessarily, I am, again, reluctant to tell anyone like you should go take a loan but I do think that there is a certain amount of capital that is required to make certain kinds of moves in your business. It doesn't have to be right off the bat when you're brand new, but like once a business is established, it needs some cash, to your point, to like actually keep going. And I see so many people getting stuck in this like starvation mode where they're starving their businesses, and that it's just it's a cyclical thing that doesn't typically go well.
Well, and especially for project-based business like photography is, you have that feast or famine cash flow cycle. So it kind of all comes full circle. We talked about cash being the pain point. That balance sheet and talking about debt is the first step, because if you don't have a line of credit, that is my first recommendation to any business owner, especially if your books look good right now. Mm-hmm. If you're in a good position, it's the best time to go talk to a bank, preferably a credit union. They're a little more lenient than banks are and easier to get things from. Mm-hmm. But go talk to them and set up a line of credit. And if you don't know what a line of credit is, it is access to capital. It is, let's say, $10,000 that you can say, I know that we've got this wedding coming up in a month and I'm going to get paid, but I'm not going to get paid for a month. Mm-hmm. And I need to do X, Y, and Z before that. So you take money out of the line of credit. You go do the things you need to do to stay in business. That we got to keep the lights on. Mm-hmm. Hopefully you're paying QuickBooks and a bookkeeper. So then you do the things you need to do. And then when that money comes in from the wedding, you go pay the line of credit back. It gives you access to stay in business until the other cash comes in. And what I love, and I'm very mindset oriented when it comes to money, what I love about a line of credit is if you are in a pinch, if you are in a position where you're like, I've got to go get another job, I've got to do something, like we can't pay the bills, mm-hmm. you're in panic mode. You're mm-hmm. not thinking straight. You're not making the best business decisions. But a line of credit and having access to capital allows you to take some space. It gives you breathing room. It lets you pay the bills and say, okay, let's take a step back. what do we need to do in the next 3 months to fix this?
Excellent.
And you've got it covered.
Yeah. So talk to me about how you see the difference between a line of credit from, let's say, a credit union versus a credit card, which is another kind of line of credit, and how to manage both of those since they're both likely a reality in the business.
What I love about a line of credit is that it is reassessed by the bank every year. Mm-hmm. So you cannot stick money on there and indefinitely never pay it off. Mm-hmm. The bank is going to be looking at that line of credit and say, hey, we know you've only been paying interest, but we're about to reassess this and we really need you to make a payment on it. And it's not going to be a small payment usually. They're going to say, we need to see X amount of movement on the principal balance. Credit cards are so easy to swipe. And don't get me wrong, everything goes on my credit card, but sure. I also pay it off every month.
Right. Likewise.
They are so easy to swipe and they are so easy to rack up and kind of almost forget about.
Yeah.
And they sit there and hang over you.
And just accrue interest like nobody's business.
At astronomical rates right now.
Yeah. Yeah, absolutely. Okay, great. So I didn't mean to hang us up on that too much, but I think that that is, to your point, really foundational and a really important distinction to sort of note.
Definitely. So once we're good with balance sheet, we're good with debt. We've had the conversation of, what do you feel about debt? Do we need debt? Do we not need debt? Then we move into revenue. And revenue is one of my favorite places to be in because we get to talk about what are your products and services? What are the different items that you offer? What packages do you offer? How do you calculate them? And part of the reason revenue is my favorite is 2 of the 3 profit levers you can pull in your business sit in revenue, and they're really easy. So the first one, and I'm sure you guys have heard this if you've listened to any kind of coach, is to raise your rates. Mm-hmm. We are in an astronomical inflation period. When is the last time you raised your rates? And I can hear the people saying, but nobody wants to pay it. Nobody's got more money. If you raise your rates, you don't need as many clients.
Right.
Mathematically, I promise it works. Mm-hmm. So know your revenue streams, raise your rates. The other profit lever that sits in revenue is knowing your profit margins. If you market the heck out of your most profitable product or service, then you are going to see your profit increase. Because it is the most profitable. Where I see a lot of service providers stumble is they don't value their time when it comes to calculating profit margin. The profit margin on your $1,500 photography package is not $1,500.
Right. Even if you have no hard costs associated with it, you're spending time and that time is money.
Even if you don't have an ounce of software or any of the other things, your time is worth money.
Yeah. And the thing that I think really blows a lot of photographers' minds when they sort of wrap their heads around this is many of us start out in a place where we do all the things because we feel like, well, I can edit my photos. I can, manage all of my client interaction. I can ... right? And I'll use editing as an example. Editing is something that takes a lot of time. But if you're already paying for the software that we use, which we all pay for, it then has the feel of zero cost. But if you spend, let's say, 2 hours on a session, getting there, shooting, getting back, so 2 total hours, and then you spend 4 to 6 hours editing when you could have paid someone, let's say, $60 to edit your images from that 1 hour session, if you shot in those 6 hours, if you went and did 3 more 2-hour sessions, right? Think about the revenue versus the cost there. And I think that, again, a lot of people are like, well, I don't have anybody knocking down my door. Okay, so spend that time marketing your business.
And marketing the thing that's going to make the most money. That's that other profit lever, is making sure it's making you money. Right. So I love the idea of calculating how many hours of editing, how many hours in general go into each of those packages that you offer. How much of your time goes into it? And then which one of those requires the least amount of time while giving you the most money?
Love it.
That's the thing you want to go market.
Excellent. All right. So
that's revenue. Mm-hmm. The next one, and this is where everybody goes to when we start talking about budgets, costs, your expenses. We've talked about the costs that go into generating revenue. This is going to be what I call the costs underneath the second half of your P&L. We want to know what are the recurring and random costs that come into your business. This is going to be your cell phone, your internet, your software, your driving, your vehicle, your gas. Those things go into those expenses in your business. Mm-hmm. And with our clients, we bucket this into one of three categories. You have what I like to call the required expenses. I don't know a single business that can run without cell phone and internet.
Right.
You have what I like to call the personal perks, the things your tax CPA, and I hope you have a tax person helping you with taxes, told you to run through the business to bring down your profits, mm-hmm. but they don't actually add value to the business as itself. They add value to the business owner. Mm-hmm. So one of my favorite examples of this is if you have kids and you put them on payroll, you get to run it through the business and it's a great tax deduction, but it's not adding value to them. Like my kids cleaning up my desk is not adding value to the business.
Right.
It's adding value to me. Mm-hmm. So those are our personal perks. Everything else you spend in your business is an investment. It may not feel like it. Mm-hmm. And I have a lot of conversations with people where we're trying to figure out, was it required or is it an investment? Everything that is an investment in your business needs to return time, money, or both to you or your business. And if it's not doing that, the next question is it marketing? Because we all know that takes time. Mm-hmm. If it's marketing, we want to give it a deadline. If it's not marketing and it's not adding time, money, or both back to you, why are we paying it?
Right. So give us some specific examples.
In photography, if you have a specific software that you're using for editing, but then let's say there's another software you bought and you've got these 3 different softwares and you kind of like all of them and they do slightly different things. The question becomes, which one is saving you the most time? Mm-hmm. Which one is the easiest for you to use? And how is it adding back to your business? How much time, how is it saving you time versus using this other really cheap thing mm-hmm. that could do the same thing?
Since I know you're not a photographer, I'm gonna throw some specific examples at you. That's a good one. Although I think that with software, that's not true. We do double up on software, no question. We should all smooth out our tech stacks as much as possible. But what about things like gear? Ooh, we go into the camera store and there's something really fun. I keep my gear really simple. I can accomplish what I need to accomplish with a camera and a couple of lenses. I am not typically drawn to the bright, shiny object syndrome of gear. I have my own bright, shiny objects, but I feel like that's an easy one to talk about potentially. What about something a little harder though? What about going to a conference where you sort of believe that it will build your network and you'll learn some things, but you don't know what you're going to learn and you don't know exactly how to take that away. How do you budget for something like that?
I will actually give a personal example. I went to a conference recently saying, I'm going to go network. I'm going to learn all the things. I literally came back and went, this is made for 20 somethings and extroverts. And I don't know that I want to do this again.
Yep.
But when you go to a conference, if you are going to budget for that conference and you're looking at these expenses, this is something you really want to do, then you also need to budget the time and money to implement what you learn.
Oh,
otherwise, it's not going to give you a return.
So good. Yeah. I'm a big believer in in-person learning and the ability to setting aside some money for that, because I do think that there are these sort of unpredictable benefits, but choosing wisely and yes, absolutely spending time, because how many times have we walked out of a conference or some sort of training and been like, my mind is so full, and then you go back to life
and you don't even look back.
Yeah, you don't. And it's a really important point. That's great. Okay. Thank you.
And there's a lot of things that are just like that. As a CPA, I have to get certain hours. So we know that for me, there's a part of it that I consider required. I have mm-hmm. to get my continuing education credits, but I also know I can go get those for $200 at a really boring website and get it all done.
Right.
If I'm going to go somewhere fun and I know I'm doing it to learn something, I want to make sure that learning gives back to my business or to you personally. Sometimes it is about filling your cup and filling that personal need so that you are not burnt out.
Yeah, absolutely. So good. Okay.
Okay, so we got balance sheet, we looked at revenue, we looked at expense. Now you've literally looked at everything in your business, and it's not that scary. Like, we can take our head out of the sand, we can look at all of it. It's
Yep.
not that bad.
The monsters in the dark are a lot less scary once you flip on the light. Yeah.
It's not that bad. So now you know the revenue, you know the expense. Now we get to build a budget because we know where the money's coming from, we know where the money's going to, and hopefully you can. I wouldn't recommend doing this without about a year's worth of data because photography, like a lot of other project-based businesses, you're going to see cycles and you're going to see some seasonality to when things get busy and when they slow down. And you want to be able to see that in your budget when you're putting it in. So you're going to build a budget where you estimate out the revenues that are coming in based on what we did in that revenue work. You're going to estimate your expenses based on what we did in the expense work because you're going to know, is it monthly? Is it quarterly? How often? And hopefully you've cut off all the things we said to cut off when we decided they weren't valuable. And you map it out line by line through your profit and loss statement. So if you go into QuickBooks, and even though you have a bookkeeper, I hope you are still getting in and looking in QuickBooks, go in, pull your profit and loss statement. It's going to have all those accounts. You want to put a number next to each of them, line by line, out for the rest of the month. How much am I spending in cell phone? How much am I spending in gear? How much am I spending in software? Get all of those numbers put together, and then you get to see, where am I going to be at the end of the year? Now, that doesn't totally answer all the questions. So we're only on part 4 of 6. Build the budget, figure out what you want things to look like, and layer in the goals, but be realistic. If you want things to increase, put it in there, make it a goal so that you can compare to it. But we're not going to go from $2,000 this month to $10,000 next year in the same month. Like, make sure if you've ever heard of SMART goals, we're applying that same concept, but to a number,
right?
And coming up with that number in your budget. So we build that out. Then we get to do what I call budget to actuals. And this is second to doing revenue and profit margins. This is my second favorite part. You get to ask why the numbers are doing what they're doing. You get to start to understand the story that they're telling you. When you take your actual results and you compare it to that budget that you built, the numbers are not going to line up. In 3 years of doing this, I've had one client where the numbers lined up once. They're not going to line up. They're not meant to line up.
Sure.
But you want to ask why.
Yeah.
So you ask yourself why. And I don't want you to think, if you're looking at this for the first time and your actuals are coming in above budget, that's not always a bad thing. If people think if you're over budget, that means it's bad. If you have an associate that's helping you with editing, let's say you've got an assistant that's doing the editing for you and they spent more hours working than you had budgeted. So that number is going to be over budget. But it's because you had more clients and your revenue is also over budget. That's a great reason to be over budget.
Sure.
In that scenario, we're going to say, okay, can we keep doing that? Are we going to keep turning over more clients? And do we need to adjust our budget? I am not a set it and forget it kind of person when it comes to budget. I want you looking at it every single month, and I want you changing it. Make the budget match what's going on in life. And if you need to change what's going on in life to still match the budget, you have the opportunity to do so because you're looking and you know where things are off.
All of that sounds amazing. But I think that this year in particular, the thing that I just am hearing in all my groups and like talking to different photographers is like, I don't know what to project, because let's say somebody's been in business for 3 years. The first 2 years and last year looked pretty different for most of those people. And so you get pretty gun shy about like, well, I don't want to assume things are going to be bad again, because I feel like nobody wants to be in that headspace. And that sort of conservative approach can feel safe, but it can also sort of limit you in what opportunities and risks you're willing to take part in. But you also don't want to assume like, here we go, like roses are raining down and let's go nuts. So how do you coach people in that space?
I would say if you have a lot of thoughts around trying to project out for a whole year, start with a quarter. Start with the next 90 days. How does the next 90 days feel to you? You should have an idea of who you've got scheduled in those next 90 days, what's coming in. And if 90 days feels like too much, let's start with next month. What do we think next month is going to look like? I want you to get comfortable with the process and with wrapping your head around that. And then we start to look out farther. And it's a projection. It's not going to be right. but we're going to make our best guess with how things are going. And it may not be how things went last year. It may be how did things go last month.
Mm-hmm.
If we think that we're like, we just got 10 brand new clients last month and we're like rocking and rolling, we're going to say, we think we're going to get 10 more this month. Let's put that on the books.
Mm-hmm.
You've got to look at right now.
Mm-hmm.
And if the answer is, I don't feel like we're going to get it, then you have the opportunity to say, how can I? What can we go do? How can I pivot? I'll give you an example actually of a close friend of mine. She's not a client, but we were talking during the pandemic about the photography business. And she is actually responsible for all of my branding photos. She was struggling with the family photography side. It just wasn't working in the pandemic. And she started doing the branding photography and saw it skyrocket. Business owners didn't know what to do with ourselves in the pandemic. We're like, I got to do something to market. And so it's those kinds of opportunities where you see a trend. And if it's a downward trend in one thing, what could you do that might be on an upward trend right now? And I'm going to circle back a little bit to where we talked about revenue. When you're identifying those packages, I highly recommend communicating with your bookkeeper so that you see the different types of revenue on your financial statements. You want to see that on your profit and loss. If you're doing family photography versus senior portraits versus branding photography and business headshots, those are all very different revenue streams with very different seasonalities. And if you're seeing something in your business trend down, what could you go do that trends up right now?
Amazing. That's great advice for sure. And I do think that most of us as photographers have to diversify to some degree because of the seasonality inherent in our businesses. So unless you have a very well-established business that has just tons of revenue, period, chances are you're going to want to look at, how can I stabilize my income? I have a membership for my family photography clients that serves to kind of streamline my income over the year. It's not all of my clients, but it's enough of them that I know that I have sort of like a critical mass of income every month. So that's the way that I've solved that problem. But yeah, absolutely. Different kinds of photography. I know senior portraits in particular, very seasonal. And so those people do senior portraits during whatever the season is where they live. And then they do other kinds of work in other seasons. And you don't know that straight out of the chute when you're a brand new photographer, like you're getting kind of, your feet wet and figuring it out. But if thinking about budget is something that is on your mind right now and you are maybe feeling stressed about it, it's great advice to sort of look at how you can fill the gaps.
And that leads right into the final step, that sixth part is your cash flow. And you have to know your budget. You have to know where the money's coming from and going to build a cash flow forecast. I do not recommend anybody goes and runs a cash flow statement out of QuickBooks. They are the bane of every accountant's existence that I know, and they are complete gibberish to business owners. They just don't make sense. But what does make sense is to take your budget, layer in the timing. So we talked about using credit cards. If you are using your credit card and paying it off every month, which is what we recommend, then you're going to have this month's expenses on next month's cash flow because that's when the cash is going to go out. Similarly, if you are not getting paid up front, though I highly recommend getting paid up front, and you're waiting until that session, or if you're doing a 50-50 split, you're going to have some of that money hit in 1 month, and you're going to have some of the money hit in another month. And that's going to be slightly different from your budget. So you have to know the timing components. You put those on top of your budget, and you come up with when is cash coming in and when is cash going out. And there are 3 things that we have to layer in that are not going to be on your budget. We talked, again, full circle back to debt. We talked about debt at the beginning. That is not going to show up on your profit and loss statement. So it's not going to show up in your budget, but it is going to hit your bank account every single month.
Yeah.
So you have to have that in your cash flow. The other part that you want to have in your cash flow is savings, whether that is for operational investing back in your business or having that baseline of 2 to 3 months in expenses so you don't need to go draw on something else, or to pay your taxes, because our goal is for you to be profitable. And if you're profitable, you're going to have to pay taxes. And nobody wants a $10,000 bill at the end of the year that they didn't see coming. So make sure we're saving for that. Those are not going to be on your P&L. They are going to be in your cash flow. And last but not least, even if you are an S Corp and you pay yourself on payroll, we want to see profit distributions. And there may be other names you may heard, owner's draw, owner's distributions. It can be called a lot of things. I like the term profit distributions because I want it to come from your profits. So we want to see that you are paying yourself, we're saving up for taxes, and we're taking care of our debt while also going through that budget and meeting all the needs going forward.
Love it. This is all such near and dear to my heart stuff. My story, I got divorced 6 or 7 years ago and had very little money to work with when I first came out of that, and also a lot of fear around it. And it was one of those like make or break kind of moments in my life where I really had to just sort of sit down, and as terrified as I was of like diving into it, I did that. And it has created so much mental freedom in my life, not to mention, some financial freedom. But it is one of those things where I just cannot recommend enough taking this seriously. Looking at a lot of times when I help somebody run their numbers in the photography world, they look at the numbers at the end and they're like, that's not possible. And like, I'm here to say it is, but you have to know what you're aiming for before you can start to get there. So Danielle, I know that people are going to have questions. They're going to want to learn more from you. Tell everyone where they can find you.
Yes, so we will have a page set up just for you guys. It'll have a chance to reach out by email, consult calls, and some freebies you can look into to see how to do those expense reviews, how to look at the revenues. That is going to be at our website, the number 4 cornerscfo.com/thiscan'tbethathard.
I love it. And I will put that in the show notes since that's a mouthful. Well, thank you so much. I really do appreciate you coming on here. This is it. I know that it's not everybody's favorite topic, but it is so important. And it is honestly nowhere near as hard and scary as people make it out to be. So we're looking at a bright new future, and you're going to help us get there. Thank you so much.
Thank you so much for having me. This was a blast.
Well, that's it for this week's episode of This Can't Be That Hard. I'll be back same time, same place next week. In the meantime, you can find more information about this episode, along with all the relevant links, notes, and downloads at thiscan'tbethathard.com/learn. If you like the podcast, be sure to hit the subscribe button. Even better, share the love by leaving a review in iTunes. And as always, thanks so much for joining me. I hope you have a fantastic week.